When we hear money laundering, what comes to our minds is a sequence of banking transfers or commercial transactions that involve money obtained through illegal means. But that's not all. Beyond shady underground operations, money laundering can actually take place in some surprisingly legitimate businesses. It's a massive global problem. In fact, the United Nations Office on Drugs and Crime, or UNODC, estimates that between 2% and 5% of the global GDP is laundered each year. Funds obtained through these means are still used to finance illicit operations further. Without further ado, here are the 10 most popular money laundering businesses. The first business on our list is the casino. To many of us, casinos are destinations for extravagant entertainment as there is a constant flow of money there. Unfortunately, they've also become notorious hotspots for money laundering. The most common way is to simply convert illicit funds into chips or an electronic balance, play a few rounds, and then cash out. Or, two accomplices can sit at the same table with one losing to the other on purpose, thus transferring money to them. Through these means, they have effectively legitimized their dirty money. Also, since online casinos, for instance, allow the creation and use of multiple accounts, it becomes difficult to notice suspicious transactions. It is more worrisome that some gamblers provide incorrect, incomplete, or vague identifying information, making it impossible to raise red flags around their identities. Next, we have real estate. You heard that right. In fact, money laundering through real estate is one of the oldest known ways of hiding illicit funds. It's an ideal place for money laundering because property purchases usually involve large sums of money changing hands and complex transactions. One common way of laundering money through real estate is the use of shell companies. These are fictitious entities that are established to hide the true origin and ownership of funds. These companies purchase properties under the guise of making legitimate transactions, then they channel the funds into the real estate market. Another way is purchasing properties using illegitimate funds and then inflating their value through fraudulent appraisals. There's also the flipping scheme, where criminals rapidly buy and sell properties at inflated prices to make a clean profit. Art galleries and auction houses have also presented an ideal platform for money launderers who are looking for means to legitimize their wealth. Have you ever wondered why a particular painting is sold for millions of dollars? Well, sometimes it might not be because of its artistic value. Criminals looking to legitimize illicit funds can intentionally overprice artworks through a series of artificial transactions to make it look like the value of the artwork has increased. Also, some individuals purchase artworks from museums with illegally obtained funds and keep them in high-security warehouses within free ports. As long as artworks remain in these warehouses, they are considered in transit, and as such, tax is avoided. These works can then be sold privately and anonymously, even without leaving the port. Restaurants and bars are another classic way to launder money. The reason is simple. They handle a large number of small transactions and use a lot of cash. It's common to see some restaurants and bars having a steady stream of customers despite their lackluster menus. In most cases, they might be laundering money. By intentionally inflating sales figures and mixing illicit funds with legitimate revenue, these establishments can effectively launder money while serving up dishes and drinks to unsuspecting patrons. Interestingly, if the FBI, for instance, stops by, they see a lot of customers at these establishments. That way, their revenues are justified. In essence, many restaurants and bars laundering money are legitimate businesses with real employees, a menu, and real profits. Pawn shops constitute another money laundering business. In fact, they are a lucrative industry serving not less than 30 million Americans each year. When you get to pawn shops, they appear like innocent establishments where people trade their goods for quick cash. But in some cases, they have served as convenient fronts for money laundering. Criminals can easily deposit illicit funds by pawning valuable items, including stolen assets, and then redeeming them later. Through this means, they would have effectively converted dirty money into clean assets. Of course, the police treat a case of pawning a looted property like disguising the sale of stolen property through legitimate transactions. Now, let's talk about shell companies. Also known as shell corporations or ghost firms, shell companies are essentially businesses that only exist on paper. They have no real operations or assets, and they're usually located in jurisdictions with strict privacy laws. As you rightly guessed, they're a favorite tool of money launderers. But one more thing, not all shell companies are illegal. After all, there are legitimate reasons why one can form a shell company. Consider a hostile takeover, a type of acquisition that involves taking over control of another control without necessary approval. So, for whatever reason a shell company is created, the objective remains the same: to conceal the identities. A dead end in the money trail is created by using a shell company to launder money. By setting up a network of interconnected shell companies, criminals can transfer funds gained illegally to another account in jurisdiction without strict privacy laws, most likely where the criminal resides. Let's take it a bit further to the digital age, where money laundering has gone high-tech. Cryptocurrencies are another ideal smokescreen for money laundering. Because they offer a degree of anonymity at the point of creating accounts, that is, addresses, they help criminals convert their ill-gotten gains into untraceable digital assets. Statistics by Chainalysis reveal that illicit addresses sent a whopping $23.8 billion worth of cryptocurrency in 2022. Criminals perpetrate money laundering via cryptocurrency through different methods. One way is by smurfing, where large sums of money are split into smaller accounts and sent through multiple transactions. Another is through mixing, which involves the use of services that blend cryptos of multiple users to obscure the transaction history of the cryptos. Also, money launderers can exchange cash for cryptocurrencies like Bitcoin or Ethereum through untraceable channels. Remember that since the crypto market has lax regulation and minimal oversight, it provides an ideal environment for money laundering activities to thrive. Luxury businesses also create a great channel to launder money discreetly. But who would have thought that shopping for designer handbags could be a front for money laundering? Remember, money laundering often thrives in businesses involving a lot of cash purchases. From high-end fashion boutiques to exotic car dealerships, these businesses have some inherent qualities that make them the destination of criminals looking to hide their dirty money under a facade of luxury. Firstly, they're easily transportable. Secondly, their values can rise dramatically quickly, especially based on demand and availability. Thirdly, only fewer transactions are needed to legitimize laundered funds. The vulnerability of luxury businesses to money laundering activities makes it imperative to be aware of anti-money laundering or AML vulnerabilities. Otherwise, it may result in harsh fines and even reputational damage in the long run. Then we have strip clubs. There has been a series of investigations of organized crime, human or sex trafficking, tax fraud, and overbilling schemes at strip clubs. In some cases, strip club owners are traffickers themselves. In other cases, traffickers collude with strip club owners to exploit their victims. In June 2022, there was a case where Radomir Buzdum, an owner of the strip club, was found guilty of profiting from exploiting sex trafficking victims. According to the victims, Buzdum hired only sex trafficking victims because it was easier for their traffickers to coerce them into working any shift. To hide his illicit proceeds, he opened several LLCs to channel his criminal proceeds. He also bought multiple properties. Buzdum is just one of numerous strip club owners who have been found guilty of using their businesses as money laundering machinery. Lastly, let's talk about nonprofit organizations. On a good day, nonprofit organizations are typically associated with charitable endeavors and social causes. But in recent times, they have been exploited for money laundering purposes. First, criminals exploit the reputation of these charities to launder dirty money by making donations, transfers, or financial transactions to them. Donations made to these organizations, of course, provide access to tax benefits. In some cases, donors overstate the amount being donated to charities to reduce their tax bill and launder money illegally while also capitalizing on public trust and sympathy. Other ways of laundering money in the organizations include setting up fake charities and misappropriating funds meant for humanitarian aid. And these are our top 10 picks of the most popular money laundering businesses. It's important to remember that although these industries or businesses may be susceptible to illicit activities, the vast majority of them operate with integrity and adhere to strict anti-money laundering regulations. But by being informed and vigilant, we can all play significant roles in helping to fight financial crime and protect our communities. Now, if you found this video insightful, you'll definitely want to check out our previous video on why looking poor is important, where I went even deeper on the best ways to spend your income other than living a premature, luxurious lifestyle. Thanks for watching, and see you there!